Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letters CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and thank you for joining me. I'm very glad you're here today on another episode of Reverse Mortgage Radio. I've been doing this show now since May of 2017 is when I started. Now, it hasn't always been on this program. I took over this slot in January of last year, but prior to that, I was on AM KLZ, AM 560 KLZ, and I did that show from May of 2017. So I'm going on 8 years now, I think, if my math is correct, on talking about reverse mortgages on the radio. So I'm very glad you're here. If you're listening to me for the first time, my name is Bruce Simmons. I'm the reverse mortgage manager with American Liberty Mortgage in Denver. You can reach me directly. Give me a call on the phone at 303-467-7821. 303-467-7821. Do not text me at that number. That's a landline. I still have a landline. Yes, that number actually rings to an office that's in my house that I got back in 1999. I've had that same phone number since 1999 when I started my own little one-man mortgage shop back before licensing was required and all that. And then in 2003, I stumbled into reverse mortgages. And that's when I really found my niche. So anyways, I'm very glad you're here. Again, 303-467-7821 is my direct line if you have any questions. That number is almost always forwarded to my cell phone. And once we get talking, I'll give you my cell number. You could probably just Google it too. I'm sure it's on all over the internet. But you can also visit me online. You can go to my website at reversemortgageradio.net, reversemortgageradio.net. There you can download a free consumer guide that I have that talks all about reverse mortgages, answers a whole bunch of questions about reverse mortgages. You can also fill in some basic information, no social security number, but just basic information about your house and your date of birth and things of that nature. And you can find out how much you could borrow on a reverse mortgage, roughly speaking. It's not perfect, but it's pretty close. So feel free to do that. You can get a free quote there. Your information is not going to be sold all around the internet like a lot of other sites that you go to, and they ask you to put in your information. You plug in a bunch of information, and then they say, okay, we'll have somebody get back in touch with you. And you get 15 calls from 15 different companies, half of them out of state even. So that's the way that works. Don't do that. And also, if you're shopping around, don't give your social security number out to anybody until you're ready to do business with that company. If a company tells you they need your social security number just to give you a quote, hang up. They don't. All right? Those are my quick words of wisdom. Today, I'm going to try to break the show down into 2, maybe 3 sections, because we're going to talk about a negative article that came out by a financial pundit. We're going to talk about the Doge cuts and things of that nature and all the different cuts and how people are concerned. I've talked to a few people just this week about after Trump's address to Congress and talk about cuts to HUD and all these other things and Social Security. What does that really mean for you? We're going to dive into that. And we may even talk about, if there's time, the canary in the coal mine. The canary in the coal mine. Stick around. Hopefully we'll get to that at the end of the show. But let's start off, first of all, talking about our good friend, not really, Dave Ramsey. He came out with an article, I think recently in The Street, was it? I think, yeah, a recent column in The Street. Now, I found out about this through a website called Hecm World, HECM World, WORLD. That's run by a friend of mine named Shannon Hicks, and he does a fantastic job of bringing information to the industry. His website, HeckhamWorld.com, is really geared for reverse mortgage professionals. So you want a little tiny peek behind the curtain of how we look at things, you can go to that website. He's got some great articles on there. And I'm going to be talking about one that he talked about. He's the one that brought this to my attention. And he says here, in a recent article by The Street, Dave Ramsey boldly asserts, and this is in quotes, reverse mortgages sound like a good plan. After all, who wouldn't want a dream retirement funded entirely by their house? Actually, I'm sorry. I need to try to do that. Reverse mortgages sound like a good plan. After all, who wouldn't want a dream retirement funded entirely by their house? But here's the truth. Reverse mortgages are a major ripoff. That's my Dave Ramsey voice. As per previously baseless accusations against the loan, Ramsey conveniently never specifies how a reverse mortgage is a bad deal, only focusing on the loan's upfront costs. Ironically, Ramsey notes, homeowners who take out a reverse mortgage put up their houses as collateral for the loan. That means you lose your house if you don't live up to the terms of the loan. Well, that's precisely what you have with a traditional mortgage, right? So are 15 or 30-year mortgages scams as well, Mr. Ramsey? That's what the article says. Continuing on, he says, reverse mortgages are especially risky for seniors because they carry high interest rates, accruing debt that easily lead to defaulting on the loan and the house foreclosure. And that, again, simple Google search would save Mr. Ramsey and Ramsey Solutions the embarrassment of spreading false information. A bad look for any company whose reputation hinges on the financial advice given to listeners and viewers. Also, what's typically risky and conveniently not mentioned is that for older homeowners with a fixed income, the burden of a monthly mortgage payment is a clear and present risk. Now, in my words, because that's all article stuff I was just reading to you, let's look at it. Which is more risky? The obligation that you have with a traditional mortgage to pay $1,000 or $1,500, or even if it's only $500 on a simple HELOC or something. If you have to pay that every month, and if you don't, you get foreclosed on, or a reverse mortgage that does not require a monthly payment. You can make payments if you want, but it doesn't require it. So if you want to make payments, you can, but then if 1 month something happens and you need car repairs, you don't have to make a payment. There's no recourse on that. You do have to continue to pay your homeowner's insurance, your property taxes. Those are the obligations that Dave Ramsey's talking about. You also have to maintain the home, live there as your primary residence, and keep your name on title. Those are the same responsibilities if you own your home free and clear, So it's nothing unusual here. Keep that in mind when you hear people talk about, oh, they're so risky. Reverse mortgages are risky. Compared to what? Compared to nothing. They're not risky at all, because a reverse mortgage compared to a conventional mortgage is 100 times more risky. So keep that in mind when you hear people talk about this. Just last month, I remember talking to people, and I give them the information, and they say, "Oh, but people say it's so risky. It's really, they've got all these bad stuff to say." And I said, "Well, what do they say that's bad? They can't pinpoint anything." They say, "Oh, I've just heard people lose their homes because of reverse mortgages," and it's because of stupid stuff like this that people who either don't like the program for some reason or are just plain ignorant about it spread this information, and it drives me bonkers. Anyways, let's go on to another part of the article. He talks about the myth of no home appreciation. So this is the article speaking. He says, what Ramsey and others fail to mention is that a home with or without a mortgage, or reverse mortgage for that matter, appreciates just the same as any other house, right? Most of the time when we're running numbers, calculating future equity and things of that nature, we base an appreciation rate of 4%. Although I've talked to just a couple people this week about this, because I had somebody say, well, the thing I really hate about reverse mortgages is that in 10 years, I won't have any equity left. That's false. There's no way around that. It's just flat out false. Even in 2008, now if you took out a reverse mortgage in 2007 and you took all the money that was available, back then we were loaning 50, 60, and sometimes even 70% of the value of the home. In that case, if you took out 70% of the value and the property dropped by 40%, you were upside down on it. However, if that happens and you're still living in the house and paying your taxes and insurance, it does not make any difference. You can never, ever, ever be kicked out of the home as long as you do those 5 things that I mentioned. Keep current on your property taxes, your homeowner's insurance, that's 1 and 2. Maintain the home, that's 3. Live there as your primary residence, that's 4. And keep your name on title. If you do those 5 things, nobody can ever come and demand that you leave the home or foreclose on you. And it doesn't matter if you owe $10 more than the house is worth or $10 million more than the house is worth. You can never, ever, ever be required to leave the home as long as you do those 5 things. Now, when you leave the home, if you're upside down, what's going to happen? Are your heirs going to inherit that debt? No, they're not. Your heirs do not inherit the debt. That's the reason that there's mortgage insurance on reverse mortgage loans, is that it's a non-recourse loan, meaning that the lender can never come back on you, your estate, or your heirs for any loss that they take. The reason is because the reverse mortgage has mortgage insurance, and the mortgage insurance will pay the lender. If the lender loses money, they're going to get paid. So technically, they're not going to lose any money. So they're never going to come after you, your estate, or your heirs for any loss. The absolute worst case scenario is that there's no equity left for your heirs. But that's highly unlikely now because we're only loaning mostly between 30 and 40%. If you're in your mid 80s when you get a reverse mortgage, you can get like 50% of the value, half of the value. But if you think about it, the home's appreciating, say at 3 or 4% of a year. And if you borrow $200,000, say on a $500,000 home, the 4% of appreciation on $500,000 is $20,000. Even if you're being charged $7% on a $200,000 loan, that's only $14,000. So you're still gained in that situation $6,000 in equity. Anyways, there's a better scenario here that the author of this article, Shannon Hicks, talks about. He says here, for example, a couple with a $700,000 home gets a reverse mortgage to pay off their existing mortgage balance and eliminate their required monthly principal and interest payment of $1,800. Their starting loan balance, including finance fees and the mortgage payoff, total $200,000. So they're taking $200,000 on a $700,000 home. If their interest rate is average 7% and plus another 0.5% for the mortgage insurance, that's 7.5%. In 20 years, that $200,000 will grow to $892,000. However, the home, just based on 3% appreciation, would grow to roughly $1.2 million, leaving almost the $400,000 in equity still that they started off with $500,000 when they took out the loan. And now it's down to $400,000 20 years later. In addition, they've saved 20 years of $1,800 a month principal and interest payment. Let's say you had 20 years left on your mortgage payment, so you'd be paying that for 20 years. Now you're going to keep $21,600 in cash in your pocket each year, totaling $432,000 in cash flow over that 20 years that you're keeping. So these are all factors that pundits like Dave Ramsey just do not factor in. So please be aware of this source when you hear things like that. Or your friend says, oh, reverse mortgages are a ripoff. I heard that somewhere. And you say, well, probably Dave Ramsey because he doesn't understand it, or he hates all debt. I don't know. I don't really know the reason because he's not a stupid guy. I think that he understands it. He just doesn't agree with the premise of borrowing money. Okay. Now, if you just tuned in, you're listening to Reverse Mortgage Radio. My name is Bruce Simmons. I'm the Reverse Mortgage Manager with American Liberty Mortgage. You can reach me directly if you have any questions about reverse mortgages. My number is 303-467-7821. That's my phone number. You can call me at that number. And that's one nice thing, too, because I've been with this company now 13 years with American Liberty Mortgage. I think going on 13 years. And maybe 14 now. I don't remember. Yeah, it's going on 14 now, I think. So, you can always reach me if I were even to change companies. I'm not going to anytime soon, or ever probably until I retire, which is probably 6 or 7, 8 years out. But either way, you can always reach me at that number. I've had that number since 1999, 303-467-7821. Reach me online as well at reversemortgageradio.net, reversemortgageradio.net. All right, let's talk a little bit about Doge, people's favorite topic. Whether you hate it or love it, it doesn't matter. It's talked about in every news article just about. The same person who wrote this article that I like so much, Shannon Hicks, he wrote the article about Dave Ramsey, and he has so much good information. He wrote another article that I'm not really 100% agreeing with. He says here, reforms are needed, not amputations, talking about the issues with Doge cutting FHA or HUD, cuts at HUD, and Ginnie Mae. Just for those of you that don't know, there's three kind of quasi-government type corporations, if you will. There's Fannie Mae, which most people have heard about. That's the Federal National Mortgage Association or something like that. Freddie Mac, which is basically the same thing, but they're Federal National Mortgage Corporation, or I don't remember. I should have looked up those definitions. I knew them at one time. And then there's Ginnie Mae, which is for government loans. Ginnie Mae is the government national mortgage whatever. And they're the ones that kind of, they gather, if you will, government loans, and they package them together into mortgage-backed securities, and then they sell those off. And that's what mortgage-backed securities are, that got such a bad rap back in 2008, because there was all this subprime stuff wrapped up with these supposedly A-paper loans, and it caused a lot of problems because people thought they were investing in something quality and they really weren't. But either way, Ginnie Mae is also, they're important to the reverse mortgage world because our loans are mostly FHA insured so they're insured by the Federal Housing Administration, which all falls under the umbrella of HUD, Housing and Urban Development. And so they talk in the article, Shannon talks about here, he says, there's a growing consensus that FHA and Ginnie Mae need reform. The key, however, is to strike a balance, one that modernizes operations while preserving their essential role in making homeownership, as well as the reverse mortgage called the HECM, Home Equity Conversion Mortgage, accessible to millions of American families. All we ask is for this to be done in a balanced manner, and this is a quote, which both streamlines operations of these programs and maintains their critical role in making homeownership a reality for millions of American families, said Scott Olson, Executive Director of the Community Home Lenders of America. And he said that to National Mortgage News. Basically, what's happening is I saw a headline that I think it was in Wall Street Journal or something, where HUD is cutting half of their staff. They have like 9,600 people, and they're cutting it down supposedly down to 4,300. And in here, Shannon Hicks talks about Ginnie Mae losing 40% of their workforce. He says the stress on HUD employees is palpable. A recent union survey found that 80% of staff reported extreme stress levels, with one respondent calling the situation a nightmare. The fate of an estimated 40% of HUD workforce hangs in the balance. Earlier this month, a quarter of Ginnie Mae's employees, many of whom were on probationary status, were abruptly let go, leaving the agency with just 150 employees. Probationary status, I think, is for the people who have been there less than a year. So basically, a lot of people have been hired in the last year, I guess. That's my understanding. And again, I didn't do as much research as I probably should have on this, but he has here, one key figure influencing Doge's actions is Mark Calabria, the newly appointed Associate Director of Treasury, Housing and Commerce within the Office of Management and Budget, the OMB. Calabria, however you pronounce it, I'm sorry if I'm mispronouncing it, who previously led the Federal Housing Finance Agency, will likely have significant sway over the direction of the housing policy and staff decisions. Basically, we don't know what's going to happen exactly with all of these cuts, how it's going to affect things. I talked to a person, just a customer of mine, who called me because he heard about these cuts. He's like, how's that going to affect my loan? He's had a reverse mortgage for 2 or 3 years now. And I explained to him my understanding of this. This is me, not everybody. I'm just my guess, basically. But most of the loans, all reverse mortgages, are serviced by independent companies, even the ones that are owned by HUD. What happens when a loan balance reaches a certain level with a reverse mortgage, the servicing gets transferred, or basically HUD takes over the loan for the company, but then they contract the servicing out to a private company. So HUD is not specifically servicing it. They contract that out to a private company. But most loans in place right now are serviced by individual companies and owned by individual companies. The loan is held by individual companies, not the federal government. So what happens with HUD really does not have any impact if you already have a reverse mortgage. You don't have to worry. The money that's available to you, all of that stuff, if your lender goes out of business, it's insured by the Federal Housing Administration, FHA. So it's guaranteed by the government to still be there. If you're receiving a monthly payment, for example, and the lender goes out of business, you're still going to get your monthly payment. If you've got $100,000 in your line of credit, you will still have $100,000 accessible to you in a line of credit. Basically, I'm trying to put people's mind at ease about that. So most of the stuff that happens on this is after the loan closes. So once we close the loan, you come to me, we originate the loan, we close it, we fund the loan. Everything's done from your perspective. Then on the back end, the loan has to be insured by FHA. So they have to have people review it. And I'm not sure how much of this is automated and how much isn't, but some of it is, I'm sure. It goes through checks and balances, and once it passes through all the balances, then it becomes officially insured. And then the lender can then go through Ginnie Mae to securitize the loan and create this mortgage-backed security. It's called HMBS, HECM mortgage-backed security. HECM stands for Home Equity Conversion Mortgage, and that's just the name of the FHA insured reverse mortgages. I'm sorry, I'm getting way too in the weeds here. But basically, in a nutshell, if you have a reverse mortgage, or even if you're looking into getting a reverse mortgage, I don't think that these cuts that are coming along are going to affect you much, if at all. It might slow down some of the processing, depending on if it takes longer to do certain things, to get an FHA case number or to do things like that. But most of that stuff, I think, is automated. We'll see. It could slow it down a couple weeks or so. Instead of it taking, on average, 4 weeks to close a loan, it might take 6. I'm not sure exactly how that all is going to work out. But the program is not going to go away. And I'm sure that it's going to be here for a long time. So hopefully that puts your mind at ease a little bit about reverse mortgages. Now, the other thing that people are really concerned about, I spoke to a few people this week about it, is the Social Security or Medicare cuts, supposedly. Medicare could be cut a little bit. I'm not sure about that. Medicaid probably will suffer some cuts, some federal cuts. Medicaid is a combination of federal and state programs. But Medicare, I don't know if that's going to suffer cuts. I really, really, really do not believe that Social Security will be cut. The president was elected by a lot of seniors. A lot of people receiving Social Security voted for our current president. And I cannot see him stabbing his that big of a constituency in the back by cutting their pay. That's just, I don't see that happening. However, if you're worried about it, a reverse mortgage could help put your mind at ease. I'm not trying to take advantage of a situation, but I was talking to a lady just this week who has a reverse mortgage. She got it about a year ago. She was going to pay some of it back, but she said, you know what? I'm going to keep my cash just because I'm really worried about this. And I don't know what's going to happen. And if having the reverse mortgage and access to this money for her provides her peace of mind. And that's the goal of reverse mortgages. I always tell people, the goal of the reverse mortgage is to relieve financial stress, not create it. Because every month you're charged interest on that loan. So the loan balance gets bigger if you don't make payments on this loan. It's going to get bigger and bigger and bigger. And if looking at that statement and seeing your loan balance get bigger over time is going to cause you more financial stress than the benefits that you get from a reverse mortgage, i.e. not having to make a mortgage payment or the peace of mind of having a line of credit or a monthly payment coming to you every month, then you should not do a reverse mortgage. If you're not worried about how much equity, and we just addressed it, right? Odds are you're going to have a lot of equity left in your home. But there is always a chance that it might not be there, that you might not have any equity left. If you kept the loan for 20 years and just when you happen to pass away or have to leave the home, the value dropped dramatically, it's very unlikely that that's going to happen. But it could. And if that's going to cause you more stress than the benefits you get from the loan, you shouldn't do it. However, for a lot of people, having access to additional money if some emergency happens is a huge, huge relief off their shoulders. A lot of my customers, they do fine. They're living fine. They've got a small savings account. Their Social Security and or pension or annuities are helping them make the bills and live comfortably. But they don't have a lot of money for emergencies, or if they had to take a special trip. Let's say they got a great grandbaby in California and they want to go fly out there and help out, or just to see the baby and visit for a week. It's tough. That could put a strain on their budget. So having access to that money could improve their standard of living dramatically, or their peace of mind knowing that, hey, if the engine in my car goes out, I've got $4,000 that I could pay to get it fixed, or I've got $20,000 or $30,000 to buy a reliable used car to replace it. If the furnace in my house goes out, then I've got the $10,000 I need to replace that. Whatever it may be, having that money available provides peace of mind. And if you're worried that maybe your income's going to be cut, or some people who have money in the stock market are worried about a crash. I mean, the stock market's gone down somewhat. I don't know that it's going to continue. I don't know what's going to happen in this economy. Who knows? There's so many unknowns, right? But if having access to a pool of money that you're not charged interest on until you take it out, or if you ever take it out, is going to provide you peace of mind, you need to give me a call and we can look at the numbers. My name is Bruce Simmons. My number is 303-467-7821. I'm the reverse mortgage manager with American Liberty Mortgage. I've been doing this for 22 years. And again, it's Bruce Simmons, 303-467-7821 is my direct line. You can also reach me online at reversemortgageradio.net. If you just tuned in and you missed the show, oh man, that stinks. I'm really sorry about that. But next week, you can go to my website at reversemortgageradio.net and listen to the whole show. It'll be up on my website. So thanks for joining me today. I really appreciate you listening, and hopefully if you have any questions, you give me a call. I look forward to talking with you. Have a great day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.